Hey, what's up, everybody? You're tuned into another episode of Fatherhood is Dope, the podcast. It's your guy, Aaron McGee. Man, I'm excited to continue to do the work that we're doing. We're at it again. I got another special guest, and y'all know that whenever all my guests are special, but because he's here, you know it. He's special, special. Ladies and gentlemen, show some love to Eric Meriwether. What's up, E? How you doing, man?
Yeah. I'm great, brother. I appreciate you having me on, man. I've been catching quite a few of the podcasts, man, and of course it's dope, right? To say the least, brother. So you're doing your thing, man.
Yeah, you did it the right way, man. Normally, folks will be like, yeah, I remember that episode. You got in and you got out. You didn't trap yourself.
Yeah.
So,
Man, hop in, hop out. They all dope. They all been dope. All the ones I've seen.
That's the best way. Yo, Eric, so I got you on the show today, man, because you are a financial advisor. I've known you for a couple of years now through the relationship that you actually have with my brother and the amazing work. My brother brags on you all the time, and I know you, through the work that you guys do together, your relationship is really elevated to, financial advisor to client to friends or even brothers, you know what I mean? And so
No doubt.
mad respect for you based on the level of respect and admiration that I know my blood brother Larry has for you. So it's an honor as per usual to speak with you, man. And I want to get into it, man. This episode is about finances, and we brought on a financial advisor to help me, help dads and other people listening to this episode figure out, like, how can we set ourselves up to do what's right, to do right by our families with the resources and the means that we have. And so as we start to unpack all of that, man, first, like, can you kind of lay out what a financial advisor is, like your exact role and what that entails?
Yeah, man. I think it's a lot of fancy financial terms and jargon that you typically hear as it relates to even financial advisors. You'll meet one financial advisor that does something different than someone else that you met that was titled as a financial advisor. But essentially, man, in layman's terms, what a financial advisor is someone that helps you and guides you essentially to accomplish all of your financial goals, whatever those things may be. And really, more than anything, putting together a financial plan, right? I think a lot of times we just kind of shoot from the hip, we really don't know what we don't know. We take information that we hear from different places and we try to piece it together. But essentially, a financial advisor is someone that helps you piece those things together, right, to accomplish your financial goals, and tries to help to remove any kind of risk or obstacles or barriers that would otherwise prevent you from getting there. Right. And walking with you through that.
Yeah, I think so all of it sounds good. All of it sounds important, right? But man, I work a 9 to 5 at Kroger. And I make minimum wage, or trying to make minimum wage at least, and I have a little college debt, and I pay rent, and I have a $300 car note. You know what I'm saying? So I'm building out a scenario here to say, like, that's person A, and then person B is, I make 6 figures, I'm an executive, and I drive this, and I live here. So a lot of people would assume that person B over person A needs a financial advisor, and that's generally how I see it, how I've seen it. But can you give us some clarity about, like, who needs a financial advisor, or when do we need a financial advisor?
Yeah. So I will say that everyone can benefit from talking with a financial advisor, right? So I work with a lot of my clients' children, right? And a big term I'm big on is, getting information and putting it in deep freeze, right? And you mentioned, so I never really share details or information on who I'm working with, how we're working together. But of course, you mentioned your brother Larry. And so when I first met Larry and started working with him, this was like 5 years ago, right? You knew where your brother was 5 years ago. He wasn't necessarily the quote unquote ideal financial advisor client, right? But I think there's some basic things. If you think about a home, the first thing you lay and start building when you go to build a home is the foundation, right? And so as it relates to a financial plan, there's some foundational things that everyone needs to have in place, right? Your general financial planning 101. And then past that, right, it's going to look different, because the type of home that you would want, desire, or need would probably be different from the type of home I would want or need, the type of home that Larry want to need. And so we design that home, quote unquote, financially based on those specific things. But our foundation, in a sense, is going to look similar.
Yeah.
Right. And there are different problems. The person that is making, 30, 40, 50,000, they're going to have different financial problems than the person that makes 200,000-300,000, right? But they all have problems, and we can benefit from, if we're not beginning to work together now, there's some things that you need to be doing and have in place. And so what a financial advisor should do, and that's big in our community, because quite frankly, there aren't a lot of people that look like us to do what we do. And so most financial advisors would not even entertain a conversation, right? Especially not looking like us, with someone making 40, 50,000. But they should at least be given the opportunity to have the conversation to say, these are things that you need to do. And once you get to this point, you hit these targeted goals, come back, and then we'll talk more details and do some more in-depth planning. That makes sense.
Yeah, it does. But let me ask this question, because now that you mentioned like the pay range of like 40 and 50,000, what's interesting is so I purchase a home, right? And I know that you can make a certain amount of money, but when you're going out to get a loan, not a loan, but a mortgage, you're trying to get approved for a mortgage, for a loan to purchase your home. And so it's the income versus the income debt ratio.
DTI, that's income ratio.
That's the income ratio. See, that's why you here, because I'm like, it's been a while.
It's confusing. A lot of acronyms out there, man.
Right.
Yeah,
but the debt to income ratio, right? So even from a financial advisor perspective, this is what I want to know. You said most financial advisors won't touch you. You're generalizing, but someone making $40,000, $50,000. But what if that person was actually netting $40,000 or $50,000? Because you got folks that make six figures, they net probably 70. They probably netting $80,000, but they also have a high debt ceiling, whether it's college loan, 2 to 3 car notes. They got a boat note, a motorcycle note, their kids. So we're talking about debt. So, but they have a lot of debt, and some of it is unhealthy, but they have a high income salary. So do you treat those two differently? Like someone's making six figures, but with a high debt ceiling, and someone making $50,000, but like came out of college, and assuming they went to college, but came out of college debt free, and they literally like live in an apartment paying rent, and they have a low car note and a cell phone bill, and eating out. They're probably eating out like crazy, but there's no debt associated. Like, how do you look at those two clients?
Yeah, man, I think that is a phenomenal question, bro, because that's a real thing. And that's why it's important to at least be open to having a conversation, because you never know what things look like underneath the hood of the car, right? And so one of my favorite sayings, and I forget who it's from, I hope I don't misquote this, but if your outflow exceeds your income, then your upkeep will be your downfall. You know what I'm saying? So
that sounds like a Dave Ramsey situation, but I don't know if it was Dave Ramsey.
It's not Dave. I forget who it is, man. But I forget.
You had a Dave Ramsey flow with it, so.
Yeah, man. It's maybe Zig. No, I don't Zig. It's somebody.
Like
somebody.
Zig,
one of the gurus.
If it sounds like Dave Ramsey, there's a chance that it sounds like Zig Ziglar too. It's just like.
Yeah, man. But the reality is, and that's why I say too, aside from that, you know what I'm saying? It's not about how much you make, it's more so what you do with what you make. Because the reality is, I've seen people making 50, 60 that have more assets and accumulated more wealth, right, than someone making 200,000, 300,000. They may have been netting 100 or netting 80, you know what I'm saying? Like you said. And so I think all of that happens, it begins with a conversation. Everything begins with a conversation. Everything begins with a relationship. You know what I'm saying? I think that's where, and that's why I'm open to having a conversation with anyone, because the other part of that is mindset, right? You can have a poverty mentality making $100,000, $200,000, but the person making 50, 60 having a wealth mindset. You know what I'm saying? And that's big. That's real important.
Yeah, man, thank you for doing that, because I talk to people about poverty mindsets all the time. I need to. I always harp on the poverty mindset, but I need to start contrasting it with clearly the obvious, the wealth mindset. So that's really dope. That's really dope. Yeah. Man, well, let's take a huge step back. We jumped in. You told us what a financial advisor is, which is basically what you do is professional. Honestly, based on what I know about you, I would say you do it as a lifestyle, and that's a beautiful thing, because you're doing what you love. But man, let's just take a step back, let folks get to know you a little bit, how you got into this, and then we'll talk about your family for a quick second, man. You were just telling me before we started the age of your kids now. So, but let's jump into how you got started.
Man.
Meriwether.
Yes, sir. So I actually moved up here to Murfreesboro, Tennessee to attend MTSU in 01. And I always had a knack for numbers, you know what I'm saying? Like I was naturally a saver. I naturally took an interest to just numbers and money. And so I came up here and started studying architectural engineering, believe it or not. As my mom thought I should do at the time. And so after a couple of semesters into it, my sophomore year, I realized that wasn't it. And so long story short, transferred to business, studying business. And long story short, I fell into banking as a teller. And really, man, the rest became history. I said I would never get into management with the bank. I thought it was the boringest thing. But I looked up, after graduation, and within a year, I was in management. And what I saw is I was able to kind of hone the natural skills and abilities and knowledge base that I had by just getting educated, formally educated, and learning what people that were financially successful were doing, and those also that were not. You know what I'm saying? I learned the habits that led to their financial detriment, so to speak. But I also saw that there was a wealth gap. And so I've seen that up close and personal, even to this day, working with, clients, and predominantly, or at least 50, 60%, I say African-American at this point, at least 60%. And it was just a huge contrast. And so instead of pursuing the bank management, climbing the ladder, I decided to, man, really jump off the porch, man, and go hard full time for the culture to be an advocate, right, for intergenerational wealth building and educating those in our community. And that has been a driving force and factor for me, man, just really changing lives and be able to play a part in changing someone's, financial landscape, for them and families and generations to come.
Yeah. Okay. I think you just did it at the end, but let's just draw a clear line of the meaning of intergenerational wealth builder.
Yeah, man. So, generational wealth, and I know Larry, he always mentions, the Proverbs, a good man leaves an inheritance to his children's children, right? So intergenerational is not just one generation, but if you think back, and this is a good question, kind of activity for a lot of us, and being Black, right? We come from a lineage of bondage and slavery, right? And so most of us don't even know 5, 6 generations back, right? Because our great grandparents were enslaved. But even if we go back 2 generations or 3 generations, what is the name of your great grandfather or great grandmother, right? Most of the time, yes, sir.
Can I answer that one?
Yeah, you can.
Because I actually take pride in knowing that I know the name of my great, basically 4 generations back. And his awesome. His name is Aaron McGee.
How about that?
Yeah, but we can't awesome. Go back any further than him because he doesn't have papers. But to your point, I just wanted to, because so many of us can't do it. Whenever I get the opportunity to, I got to drop it in.
That's phenomenal. So if I can ask you a question, so how did you come to find out who that man was? Did you just do research on your own, or has it been passed down to family?
It's been passed down. So he had an interesting situation where he married someone who had a white father but a black mother, and so her name was Serphonia.
Okay.
And what happened was her dad left her a small piece of land, small in terms of I forgot how many acres it was, but at any rate, they stayed on that acre, on that land, I should say. They built their home, and then they started to build. They started to have kids, and the McGee family was birthed out of those two. And what happened was they built a school, and everybody, my family still has that piece of land in Florence, Mississippi. The school is still there. The homes are still there. And my granddad hadn't lived. My granddad is 80. I'm sorry, he's 79 years old. He'll be 80 this year. And he hadn't lived there since the 60s. And to this day, he still gets all of his mail sent to the house that he grew up in. And so right now, that land and those homes on that property, they're just a part of the McGee family. So we're able to document appropriately back to Aaron McGee, but also one of my great cousins. She's like a historian of our family, and she's committed to try to figure out how to get past that. But again, the paperwork, census, not a lot out there past him showing up in Florence, Mississippi. During that time period. I don't remember the exact year, but yeah.
Yeah. So that was perfect, bro. Do you realize what just happened? Did you see that? Are you in the moment?
I'm here, but put me on. Tell me what I did.
So that's super exciting and inspiring, and should really give you just even further motivation and validation that you are on the right track. It's two ways that we leave intergenerational wealth and inheritances. Why? The reason that your great grandfather, right, grandmother, is because they started building a lineage and history of wealth, land, right? And most people, we don't know, those of us that don't know, is because they really didn't make that mark of leaving any kind of wealth, right? And not just even money, but knowledge, right? To knowledge of how to keep it going. And you mentioned historian, so you hit both of them. A historian, they are generally very intelligent and able to keep track and record of history, right? And kind of keep the information going down through the family. And money, obviously, is the intergenerational wealth: money, land, real estate, etc. Yeah. And so that was perfect, bro. So that is awesome, man. That's awesome. But and for those of us, and just to keep it going, but even those of us that did not have that, the exciting opportunity that we have is to create that, right? We will be the great grandmothers, grandfathers, you know what I'm saying? And so that's an amazing opportunity that we have, man. But that's awesome about your fam, man. I don't hear it often, but that's a beautiful thing.
Yeah, I don't hear it often either, man. So I was really stoked when I found out the history of what that land means, and the fact that we still have it in our family, and and we're managing it peacefully.
Right. That's a feat in itself, brother.
Yeah. Hey, so I want to know, man, when should fathers, let's transition, for the dads listening, when should fathers, man, like start to teach their kids about finances? I had Courtney Hale on the show. He did an episode, and Courtney does Knowledge Bank, and so we got to talk about it from his perspective. And Courtney's thing was, man, if they're, and he was promoting one of his products, but his thing was, man, if they can sing Baby Shark, you can kind of get them involved in his Super Money Kids Bank. So that's one thing. So that's for the kids. But like, if we backtrack it to the dads, like, when is an appropriate time, or how should we start to have conversations with our kids about finances, and what type of lessons could we teach them, without having to go out and buy a product, just through our daily interactions?
Yeah. So first and foremost, man, shout out to C. Hale. That's my guy, man. We met, I guess it's probably been close to 4 years now, which is crazy. When I volunteered, I spoke somewhere, and we connected, and then started volunteering with Knowledge Bank.
Oh,
and
sweet.
So if you have kids, first and foremost, go ahead and cop the Knowledge Banks. Teach your kids how to spend, save, and give early on. Okay. So definitely endorse that. Great, awesome guy. Follow him. But I'd say really as early as they can begin to speak, right? I was listening to something and it said that money is the universal language, right? Money is the universal in math, numbers. It's something that no matter where you are, you can understand it. It may change form, right? But it's universal. And so you can teach your kids how to save and budget, right? And spending what you have and keeping some of what you earn, keeping a portion of everything that you earn. So I've taught, my girls that it's important to make sure that you keep a portion of everything that you earn. And if you always save money, you'll always have money, right? If every dime that you got, you save, even a penny or 2 cents of it, right? You'll always have. That'll just accumulate over time. Another really, really big thing is stock, right? Stock, insurance, right? Teaching them about things that we have. I think it's great to be transparent with your kids. I think that's something I know coming up in my community and a lot of folks that I was around, you didn't discuss money or anything about it. And I think some of it was because of lack of education, but we can teach our kids why it's important to have insurance and what insurance means, what it is to have a stock and own a portion or piece of that Disney, right, or Apple iPad that you have, like having ownership in the things that you own.
Yeah. So I got a question for you, man. I polled this question since you just mentioned Apple. I'm gonna go to it. Okay. Apple and Tesla have both announced stock splits, and so I'm thinking that this could be like a big ticket in for families who usually don't have like $400 sitting around for one Apple share. So how would you say families could go about taking advantage of these stock splits? And what is a stock split?
Yeah, so a stock split is essentially a company dividing its shares to raise liquidity, i.e., if you have, I think it's like $450 maybe now, Apple stock, I think is at. And so if you divide that, 4 ways, you got like 112, 115, somewhere around that. And now it's more affordable, quote unquote. It's the same money, right? So if you have 450 shares, you just divide that by 4, and now you have more shares, right? But it's essentially the same money. It's just more shares. But
so does that mean that 4 people will need to go in on that one piece of stock?
Nah, so let me just give it to you. So 450 is $450 a share, right? And so the stock split essentially means, I think Apple is a 4-for-1 stock split, right? And so what you do is, however many shares you have, you multiply that number by 4, and then you divide whatever that share price is by 4. So I'll give it to you simply. 450 divided by 4 is 112.50, right? So you divide whatever that share price is by 4. So that means today, if I want to own Apple, I buy 1 share, and that's going to cost me $450, right? So let's just keep it that simple. I buy 1 share today, and then later here in the month, that split happens when it's supposed to occur. Let's just say the stock price doesn't move, but it will. If I had 1 share, now I'll divide that 450 by 4. So I'll have 112.50 a share, and then whatever that share is, you multiply that by that split number. So you divide the price by that number, the price of the stock, the share, and then you multiply the number of shares. So now I have 4 shares. So at first I had 1 share for 450. Now I have 4 shares for 112.50. Yeah. Right? Same money, but where it comes in for somebody like you mentioned that says, man, it's that much for 1 share, 450. I don't have that. I don't want to pay that much toward 1 share right now. When the stock splits, now that person can buy 1 share for 112.50, or they can take that same 450 now and buy 4 shares for 112.50, right? So they own more shares. Does that make sense?
Yeah, so, okay, so go back to this liquidity piece. Like, so how does that benefit Apple by taking their share prices down?
Yeah, so
now it creates I guess, an easier entry point for people who may not be in the market. Because I'm like, if I already have 60 shares in Apple, then I'm trying to see how am I winning. Well, I think you just explained that in the 4-piece, right? But I guess I'm trying to see where's the benefit for the actual company.
Yeah. So the benefit in the company is you keyed in on it in the beginning. You said I think it was something to the extent of households that wouldn't spend or didn't have $400 now has access now to purchase it at a much lower price, or in their mind, psychologically, emotionally, it feels like a discount.
So
right?
Now you get more people in the pipeline who normally weren't in the market. So you grow the market, you expand the market by lowering the barrier of entry.
Yes. And what does that do for people that already own it? What would be your assumption? So if I own,
so
and
now
it splits.
I can own more stock. Now my one stock turned into 4?
It does. So it's more shares.
It quadrupled.
Yeah, so it's the same money, but what happens is when people are buying, that's driving the price up.
Yeah.
Right?
Yeah.
And so I own, and if the stock is on fire and everybody's buying more because it's at a lower price, then I can benefit too, because that's going to raise liquidity, profitability, et cetera, for the company. And being an owner, right, more people are investing in my company.
Yeah. That's good. That's good. I was just talking to somebody, man, you know that I worked in a nonprofit space. And so this kind of goes into this space that I was talking to somebody about the other day about like diversifying their income. So if you have a nonprofit organization that's really like grant heavy, like, you know, you can have 95% grant and your cash flow may be good, but you know, it only takes like 1 or 2 of those grants to pull out. And so what you want to do is diversify your cash flow or your donor base, whereas you know a 70-30 split, a 60-40 split, where you have, and if you can get a 50, a 30, and a 20 split where you got 50% grant, 30% you know just donors, and then you have like some social enterprise on the side that's bringing in 20%. But what it does is that it gives you different streams of income for the organization for people that normally would not have been in the market, because grants can, you know, finance the entire organization, but it only takes one of them to fall through, or the lifespan of most grants are like 3 to 5 years. So when I hear you talk about this stock market and the splits, I'm thinking that if you have the same 100 people rotating and buying all of your stock, that's good. They're putting more money in, but what if you could multiply that 100 by 4? So now you have 400 people. You already got your 100 loyal people, but you've created a space for 300 new families. Even if you got 100 new families to come in, even if they're coming in for a lower point of entry, those are 100 families that you would not have otherwise had.
Yep, absolutely. So this is what I taught my girl. So because we own a little bit of Apple. So when Apple split, when I got the news, I taught my daughter just what we walked through. And it's things like kids are like sponges, and she's 10.
How old is your daughter? Which one?
So my oldest, Ariana, she's 10. And my youngest is 8. So my 8-year-old, she's all over the place. She's not quite there yet, but my 10-year-old, she's really starting to key in and hone in. And she has kind of that gifting as well, and knack for numbers and money, but she gets it. And so these are things we can teach our kids. And then teach them, this is why we're buying, this is what's happening with the stocks, etc. And if I can take a couple of steps back really quick and touch on 2 things, because it's really, really important. Things that we can do for our kids, we can set up college funds. There are things called 529 college savings plans, which provides tax-free money, right, to pay for K through 12 or college, tax-free. And then you also have UTMA accounts, which is basically Uniform Transfer to Minors Act. It's an investment account that you can open up basically for your kids, and it's their money. You're just a custodian of it, right? So these are things that we can, and then another, I get it to you for free. If you are a business owner, you own a business and you have children that are of age where they can organize files in a cabinet or clean, etc., you can put them on your payroll and open up Roth IRAs for them, which are retirement vehicles that are completely tax-free.
If they can open a filing cabinet and put paper in a folder?
Yeah, basically filing. So what that was basically saying is...
No, that was good. I just love how simple you made it.
Yeah,
Can you
that's
staple
what I try to
paper?
do, brother.
Look, Eric, can you staple paper?
Yeah, can you staple paper, baby? All right, we got it. If you can write a job description of what your baby is doing, baby girl or baby boy is doing, then that validates them, and you can get up to, you can pay them like up to, I think 10 or 11,000 roughly tax-free income, right? They're not taxed on their money, and you can contribute up to 6,000 into a Roth. So that's just for free, right? So those are things we can do aside from just the regular savings accounts that are not growing, in addition to the stocks. Yeah.
All right. So it's a lot of information, but one of the things, you know, as a financial advisor, I know you talk about stocks, investing, and then there's insurance as well. And I've learned a lot about insurance over the past couple of years. But I want you to help us like really understand how one, insurance could be used as a wealth building tool. You know who my brother is, so you know every conversation we have, and if you follow my brother on any social media platform, you know all he talks about is building your credit and, like, you know, generational wealth. So Larry has really brought that to my attention, you know, about non-traditional ways or non-traditional routes to grow wealth through insurance in our communities. And so I want you to kind of tell us about that, and then talk about the opportunities and responsibilities that come along with that.
Yeah, man, you can, you know, talk, Larry. I know Larry will talk to you till you're blue in the face about that. But I'm really big on insurance, right? It's one of those foundational pieces, like I was speaking earlier. Number one is protecting your income. So this is one I'm gonna give this to you for free as well. So if you are an entrepreneur, what happens if you're not able to work? If you're sick or injured, right, and can't work for 3 months, 6 months, a year, right? We need to have something in place. It's individual disability coverage that you can buy that will pay you $2,000, $5,000, $10,000, right? Depending on how much income you're bringing in, it's a certain percentage of that the insurance company will pay you. That is very inexpensive to get when you're younger. So that's one kind of way to bulletproof your plan. Even if you can't work, you're still getting paid. So that's important, something that's often overlooked. Secondly is life insurance. So it's the foundation and cornerstone of a solid financial plan, right? First and foremost, what insurance does, I ask most people, for one, how much are you worth, right? How much do you believe you're worth? Most people would like to feel like I'm priceless, right? And so in that case, is $1 million, $2 million worth of life insurance too much, right? How much are you worth? Secondly, though, how much are you actually worth from an income generation standpoint? And so you'll generally hear, how much life insurance should you have? Well, a standard, quote unquote, is 10 times your annual income, right? That's usually, in most cases, going to be at least what someone needs. And at our ages, you know, 20s, 30s, 10 times somebody's income at a minimum is usually going to be at least, you know, 500 to $1 million, right? So we need at least that. And what that does is their plans, goals, hopes, and dreams that we have for our family, we're going to invest. We want to build wealth, build legacy. We want to have money for retirement, to live freely. And, you know, with our spouses and kids, we want to pay for college, right? We want to give down payments on homes. Well, if you die today and you don't have anything in place, right, then those dreams won't be realized that you had for your family, right? So I've seen both sides where someone passes and we pass in the bucket, we got to do fish fries, etc. And that's different cultures, different people, right?
No shade, but GoFundMe on Facebook too.
GoFundMe on Facebook is not life insurance, right? But then you have someone who passes and they leave the family $500,000, $1 million, 1.5 million. Do you know what that does
for an entire generation?
Entire generation. And if invested appropriately and handled and managed appropriately, that it should multiply and duplicate, right? So if someone leaves $1 million, the next person leaves $2 million at least, then the next person at least $3 million, it continues to build, right? So that's just from a high surface level. But another way to build wealth, and I've been teaching, preaching, and talking about this, but one way to actually build wealth, you can actually own, that's renting is the regular type of insurance term. And I had a client, because they know I'm always preaching, so I had a client to send me a video that Candy from Escape, she was speaking on a panel, and she was like, there's types of insurances that you can have that builds cash, right? And so life insurance has living benefits, right? And we don't have to get too deep into this, but there's policies that you can pay into, right? So you're paying for life insurance, but no matter when you die, you can live to be 100, it's going to pay out. But more so than that, let's just say hypothetically, you put in 100 grand into a life insurance policy over a 20-year period, right? Well, if you put 100 grand in, you'd have at least 250,000 in cash, and in most cases, $500,000 in life insurance. And you can access, right, if done appropriately, access that cash, that 250, right, pulling it out tax-free, and then whenever you pass, the death benefit, right, is going to be there and pays out to your family tax-free. It's a guaranteed way to build wealth, to avoid taxation, right, and have more leverage. That makes sense?
Yeah, it does. It does. And if I don't catch it all now, I catch it when I edit this and I go back and I listen. So, and if you're listening or you're watching, you got an opportunity to rewind. Here's the concerning point, though, Eric, because you're making so much sense and it sounds so right. It is so true. And basically, you're telling us you're basically telling us good practices and what people who have wealth, like this is a way that so many people have built wealth. But why is it that I'm gonna speak for a generation or a culture of people we're more inclined and more comfortable to insure our cars and get renters or homeowners insurance, but not insure our lives? Because we're all gonna die, and it's inevitable. And knowing that if you insure your life like you insure your car and your house, you dying, whether it's untimely or whether you live a beautiful life and go with your entire family in the room, that there's a benefit that can literally take care of your family if managed appropriately for the rest of their lives.
Yeah.
Absolutely. So I guess I'm trying to see how do you, as a financial professional, how do you help break through those barriers? Because I really do feel like it's a mindset. If I just take one quick second and say, in the climate of our culture right now, with all of the racial tension around, I feel like one profession that has center stage is like mental health professionals. We're all under a lot of pressure. Everybody needs to see a therapist, whether because everybody got something going on. So I think that it's the time for mental health professionals to take the stage and the seats that at the tables that they deserve, right? But now I come over here and I'm thinking about financial advisors, folks like you who literally, you do this for a living. You clearly already articulated that you implement it within your family and your profession. What type of barriers do you face with getting the average person? I'm the average person. What type of barriers do you face with getting us to come on board and realizing the significance and putting mechanisms like this in place?
Yeah. First and foremost, shameless plug, 2 seconds. My wife is actually a mental health therapist, LPC, MHSP, or something like that. Beloved Counseling Services, Tempest Meriwether. She just left her 9 to 5, shouts out Friday, and she's full-time on her own. So we got the finance and then the mental health. And so she's been a blessing to be married to, man, because you're right. Like with everything going on, it's definitely a topic of conversation, right? And something that needs to be promoted more, right? And so she's doing her work, her calling, her mission to help people in that vein to work on the mentals, and I got the money. So,
go, man, go, because I know you've been working on that.
No, man, it's just off the dome, man, for real, brother.
She got the mental, I got the money.
Yeah, she got the mentals, I got the money. Yeah, man, but to your question, though, man, it's all about education. I'm really, 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 really big on education. And I think we live in an era where we have access to unlimited information, right? But we don't have enough education. And so what I see is that we just simply don't know what we don't know. And that is uncovered, and we're able to be helped and walk through that through being asked the right questions, right? Because there are a lot of things, there are a lot of salespeople out there, right? Good, bad, but all that quote unquote sales is helping someone to identify a need and then filling that need with a solution, right? And so is really all about education and sharing stories. And that's how I help my clients to truly see that, right? Sharing what I do, because you have to, whatever you're doing, right? You have to, or whatever you're trying to do or get someone else to do, it needs to be authentic. And so I'm one that is really big on practicing what you preach, right? So that's first and foremost. And so when I'm speaking to people, it's not only from the standpoint and perspective of what I've seen and what I've helped other people to do, but also what I'm specifically doing, right? I'm in the boat with you. And for me, I come from a background where, yeah, I was naturally a good saver and I had a certain mentality, but that was it, right? So I had to go through all of the same emotions, all of the same struggles, all of the same barriers, and I'm still breaking through some of those, right? And so when you can connect with a person and relate, right, and provide education as to why, that's where the magic happens, so to speak. And people start to realize, and I use stories. So do you remember when, when you saw X in this situation, if it's someone famous or a situation that occurred, and then explaining to them how they got to that point, right? Yeah. And what that entails, and especially as it relates to insurance. We're just not educated. We don't know. And we hear it's bad, but we don't hear the detail or explanations that make sense as to why.
Yeah. Yeah, we have our work cut out for us, man. But that's one of the reasons why I wanted to have this conversation, so that folks can understand that, these type of resources, yeah, they're available for you, but there are people like you that can walk them through it and take a really, for the average person, sometimes a high level, complex idea, and really break it down into those terms. And I think that even when you just mentioned your storytelling really helps with that. I did want to backtrack really quick, because when you were talking about the insurance policies, I had a question. So what if you, I'm not going to use Larry anymore. So I make $50,000 annually. I'm a Nashville teacher, so I make like $47,000.
Yeah.
I'm sure Metro Nashville has life insurance or something in their whole government package, right? But I want to insure myself. I want to do life insurance outside of that, my own policy, which I can do. Yeah. But let's say, I make $47,000 now, and let me do the math. I've been having my calculator right here. I was trying to keep up with you, but 47,000 times 10, that's $470,000, right? Mm-hmm. That's 10 times, like you said. So what if I did a life insurance, and then I got up to that 10 times my annual salary? So that's $470,000 policy. And you can maybe even round that up to $500,000 for just to be safe. What do I do then? So I do that in 2015, but now it's 2017. I mean, it's 2019, and now I am a assistant principal in Metro Nashville, and I make $90,000 a year. How does that impact the policy? And like, do I come back, because now that's $900,000, and maybe I got a little side business on Etsy or Facebook Marketplace, I don't know, and and that's another, I don't know, but I can get to $1 million. So like, is a life insurance policy something that you need to reevaluate on an annual basis, or do you reevaluate that as your income changes? And what's worth an income change that you would do it? So is it like a 5,000? I'm asking a bunch of questions in one. But
I'm with you.
Is it like a $5,000 incremental change, a $1,200 pay increase, or a $10,000 pay increase?
So first and foremost, let me just start by saying that's, if you read a book, or because talking financial head, speaking general, right? Generalities, because I'm even now, there may be hundreds of thousands of people that will watch this. And so that's just in general.
Let's claim it. Let's claim that.
Actually, I was thinking millions. I'm like, that's actually too low. Like millions. Come on, brother. No, but seriously, no one can tell you how much life insurance you need, right? Okay. And there are three components to how much life insurance you need. Number one, I'm talking to a young person or couples, a problem that I've had like for years, it's a gift and a curse, is I live 10, 20 years ahead. And it irks my wife to no end, right? But I live in the future, right? I'm learning to enjoy the here and the now and stopping to smell the roses. But when you look at life insurance, I tell people to let's look at it, especially for someone young in their 20s, like Larry, right? We'll just plug him there. Do you want to pay off debt, right? So if you're married and you have a mortgage, you've got maybe car loans, et cetera, student loans, do you want to pay off debt? Most people, for spouses or even family, if they have debts and things together, yes, they want to pay it off. They don't want to leave people in a bad situation. Number two is supplementing or replacing income, right? So you're not married now, but maybe in 2 to 3 years, right, things progress with the young lady, young man you're dating, and you want to get married, y'all have a couple of kids. If something happens to that other person, right, you'd want to replace your income to help supplement if you're not here, right? If you're not here physically to work and provide, you still want to be able to provide financially. And then lastly, would you want to be able to provide some kind of trust fund for your kids, whether it's for, again, first home, education, et cetera. In most cases, you know, people that care about other people and things outside of themselves, they want to be able to do that once they understand. So if we total all of those things up, even for somebody making 50,000, their number could be 800,000, right? And if just taking it face value, if I say, man, Aaron, you need $1 million in life insurance, but it's like, million, man, that's a lot. But if we break it down into this million will cover X, Y, and Z.
My daughter's college education, down deposit on her home. If I'm not around, I want to pay for her wedding.
Yeah, wedding. And so now it makes sense. It's an emotional connection and reasoning behind. So that's the education piece. Now it's not just $1 million life insurance policy. It's not about getting life insurance or having, it's about what the life insurance does for you, right?
That's good.
And so that's why, and then by the way, most people don't know this, again, just education. If you're in your 20s or 30s, you can get up to between 25 and 30 times your income in life insurance, right? That's not even education that we have or know.
Pause. So if you're in your 20s and 30s and you can get 20 to 30 times your income, now does that stay with you like during the duration of the duration of the policy that you have?
Yeah, I mean, it's many different type of policies that you know, you got term, permanent, you know, permanent stays with you forever. Term is for a temporary period, whether that's 10 years, 20 years, to age 80, 90. It's a lot of different types out there. And that's where it gets into, okay, let's find out and determine what's best and most important to you. What's going to be the best fit for you and your situation and circumstance, right? And it's a myriad of different factors that come into play with that. Yeah. But it's essentially insurance policies out there that can fit anyone in their specific situation based on their preferences and needs.
Okay. One thing that I tapped on really quick is that, can you just tell us the benefit, or is there a benefit in having, like the example I gave with the teacher, having a life insurance policy with your job and then doing something outside of your job? Like, is there a benefit in doing that? Should you do that? Like, what's
so Finance 101, you should always have individual disability and life insurance outside of your job. And it's simply a matter of, we've had a lot of people during the coronavirus, right, that have gotten laid off or furloughed, right, or fired, whatever the situation is. Those benefits typically do not go with you. And so if you're laid off, right, or let go from your job, or you decide that you've gotten to the point where you're confident enough in yourself and you're betting on yourself and you start a business, right? If you didn't have any insurances outside of, right, your company, at that point, then you have to go out and get it. And if you're 10 years older, if it's 5 years older, insurance is based off your age and your health. And typically our health declines the older we get. And so it's going to be most affordable from the term standpoint, and then more value and cash value that you build in permanent policies the younger that you are. And also from the standpoint of permanent policies, I've got clients that have literally left their companies and jobs, and they can people can borrow from or pull cash value from their policies to even help to aid in business startup or major emergencies, et cetera. So there are a number of different benefits and reasons why it makes sense to have coverage outside of your job. If that makes sense.
Yeah, man, I'm just over here thinking. That's it. I'm just over here thinking, okay, this is so good. Eric, I know you can do this. I know you can do this all day. I know this for a fact. Your wife knows it. It's why she said go on the podcast and get burned out over there, because I'm focused on the mental today. We can deal with the money this weekend. No,
yes,
so
sir.
man, yes, okay. So you actually mentioned this word earlier. Proverbs 13:22 says, a good man leaves an inheritance for his children's children.
Yeah.
You said so much, man. Let's just bring it home and let's talk to the brothers, talk to the dads, man, on the significance of doing this work. I think they've heard it, but let's put a pin in it.
Yeah. And so, you know, I think the biggest thing that we need to change the narrative on, right, is first and foremost, inflation is going up continually, right? And we're at a place where, you know, you hear about the wealth gap is widening. You hear about how, you know, home ownership is not where it should be, especially in the African-American community, right? So we need to make sure we have our credit right, and we're educated on the components of credit, how you get it good, keep it good, get it to great. We also want to make sure that we are insured, right? It's bigger than us. If we want to leave a legacy of generational wealth, and this is one of the things that I've heard on a number of occasions at this point. It's funny because I was having a personal conversation with some folks, and then I started hearing it, and we're becoming more aware. But there have been some instances of police brutality, right?
Yeah.
Some instances of police brutality and just brutality in general, right, in the community. And so if we all had as men $1 million life insurance policies and we're killed, right, for whatever reason, however that occurs, and that $1 million is infused into that family, right, people would think twice about those decisions, and especially as it relates to law enforcement in those situations, right, because it places at least a monetary value on the life, so to speak, right? But we want to make sure that we have our foundation in place, right, to build that generational wealth no matter what happens, worst case scenario. And then we want to also make sure that we are investing our money, right? We can't just simply put our money in savings and expect to become financially independent, right? You can take $100,000 invested, right, and have 500 or 600,000, right, just by investing that money over a period of 25 to 30 years. But if we leave that 100,000 sitting in a savings account in that same amount of time, we're good to have 120,000, right? So it's just a matter of positioning and understanding. And if we had time, I'd break out the financial calculator and show you the math and the numbers. And I would also educate you on how, if we're investing appropriately, right, there is no chance that we will not at least triple our money over that time frame, right? Because there's a lot of misinformation that's out there. And then above all, man, we got to make sure that we are leading our households, keeping God first, reading the scriptures and embodying and understanding those scriptures and passing this information on. So if we pass, our legacy stays and transcends generation, not just the money and the wealth, but also the information. And then real estate, I don't want to leave that out. We've got to become homeowners because that is a foundation as well of creating generational wealth, just as you gave the example with your greats, you know.
Teach us.
Yeah, man. That's what it's
Eric,
about.
So if somebody wanted to get more time with you, if somebody wanted to get more education from you, if somebody wanted to have you walk them through this entire process, like how can they engage with you?
Yeah, man. So you can find me on Facebook, Eric Meriwether, financial advisor. Website ERICMERIWETHER.NM.com. Phone 615-691-2378 can reach me directly, man. Like you said, it's not just a job, it's not just a career, but this is a lifestyle, man. This is what I do, all about empowerment. I'm also on LinkedIn, Instagram, _Eric_Meriwether. Get with me. Let's get educated and build this generational wealth and intergenerational wealth together.
Man, yo, Eric, I gotta be honest. I was like, man, this is probably gonna be a short conversation. I don't want to get tripped up on asking financial questions, but man, I feel like I can literally talk to you for another hour because there is so much to learn. There's so much to know. And you have so many gems that, or keys that can unlock the future to our families in terms of closing the generational wealth gap, the racial generational wealth gap. And one of the things that I really latched into, man, is that the economic power. When you start to talk about police brutality, insurance policy, just drawing those correlations, that's economic power, man. And that money being infused into, imagine if $1 million policy was tied to every black male body that we've just lost this year. You know what I mean? Outside of the GoFundMe's and the other crowdsourcing mechanisms that have been put in place for them to get those dollars. Man, I mean, that changes the narrative.
Yeah.
And I even see the correlation of the work that you do, how it has the ability, man, to change the narrative in terms of how we do the work that we're doing, in terms of whether you're out there protesting to bring about change in whatever regard. Let me get off this soapbox. I don't want to go in too deep because then I'll just trap myself. But long story short, as I reflect on this, man, I really see the through line in your work and how it impacts so many sectors. And so it's so much greater than sometimes I think we marginalize like insurance. It's like, yeah, that's for older people, that's for my parents or my grandparents. But thinking about what it can do to really change our lives in our 20s and our 30s and set our families up, and those we love the most if we leave this earth, specifically in an untimely age or too young.
Yeah, absolutely. If I can just interject one final
take the last word. Take the last word, Eric.
So really important, man. A few things. Everything we need to know can really be found in a book. Or books. And so a few books I want to recommend that changed my life. Number one, The Automatic Millionaire. Phenomenal book. I'll leave it to you. Check it out. It's a life changer. Talk about a family that I'm pretty sure never made any more than like $65,000 ever. But by the time that they were 50, they were millionaires, right? By very simple principles. Another book is a simple one. Quick read, The 5 Lessons a Millionaire Taught Me. All right, that's a really simple one. Got 5 key concepts that you can use and implement practically. And also, the greatest book that I have actually read to date, I'll go on air saying it, is The Millionaire Next Door. That was another life-changing, and it simply talks about living within your means, right? Not trying to keep up with the Joneses, but it gives you tangible, specific tactical strategies you can implement and mindsets that you need to have, behaviors that we need to display, because we get a lot in the media that says buy, but we have to get really honed in on making sure that we pay ourselves first. Last thing I'll say, again, because I could talk all night about this, right? If you make $100,000 a year and you're netting $70,000 of that, right? And you're spending $80,000 a year, it doesn't really do much good, right? And so we have to learn to keep a portion of everything that we earn. We don't want to get to the point where we've made $2-3 million over a lifetime and look at all of our assets and accounts and get to that point and only have $100,000, $200,000, right? That wasn't prudent use of our assets and our money, man. So keep a portion of everything that you earn, give to God, give to yourself, and spread the knowledge and education, man, as you learn it.
That man said it wasn't prudent use. I respect that. You can find that word in Proverbs or Psalms.
Yeah.
Ladies and gentlemen, man, you've been listening to Fatherhood is Dope, the podcast. This is my special guest, Eric Meriwether. We'll put information in the description on how you can connect with Eric. If you want to hear more of it, just let us know, man. We clearly can keep going, but it's so real. I appreciate you tapping in. Of course, if you're watching on YouTube, then make sure that you subscribe to the page. Click like this video, leave a comment. I will respond. And of course, if you're listening on Apple Podcasts, I want to always send a special thank you to you because you've been so loyal. You've been so faithful. And I look at the analytics. I see everywhere that you're listening from. So I just want to say thank you. Thank you to those 4 people who I don't know who continues to listen from South Africa, somewhere in Cape Town. So I've been there before. Maybe somebody I connected with, but show me love. Let me know. But I appreciate you. Continue to tap into it, man. We're going to continue to bring great dads, dope dads who are doing their part every day. And we hope that this has been something that will help you level up, man. All right. It's been real. Fatherhood is dope. Peace.